first, let's let's introduce you to the audience. Rhonda Mitchell, and you're with Seth.
I'm Rhonda Mitchell, and I am with Southeast Texas Housing, or Seth, as we go by. And I am a single-family program manager for Seth. So what I do with Seth is I'm running and I'm administering and managing the down payment assistance programs that we have. And those programs that we have, our Seth 5-Star program and our Seth Gold Star program. And I'd like to, if I have some time today, give you some great information on our Gold Star program.
Okay. Okay. So you work in concert with the various lenders?
I do. So I work and I provide support for our program lenders when they're working with the programs, as well as our home buyers. If home buyers have questions, I'm a resource for them as well. Realtors, of course. Realtors, I get phone calls from realtors that have questions. So I kind of like, I guess I'm somebody that everybody likes to talk to.
Yeah, definitely. I'm sure even after the presentation, I'll have questions, so I'll be getting back to you. But I'm going to share my screen for everybody so that they can see what we're talking about here. Let me know that you can see that on your end.
Yes, I can. I can see it perfect.
All right, great.
So this gives you our website. Our website is going to be SethGoldStar.com. And a lot of the information today that I will talk about is going to be there on SethGoldStar.com, including things like income limits, purchase price limits, our homebuyer education class, and most importantly, our list of participating lenders. All that information is there at SethGoldStar.com.
Perfect. And I guess I have a question right off the bat. What does it take for lenders to become participants?
So to be a participating lender, there's an agreement that's with Seth. They also do need to be have a correspondent relationship with the master servicer for this program. So there's a 2-step process. They do need to get approved with our master servicer, and then there's an approval process that they complete with Seth. And there are any lenders that are interested in joining, you can just give me a call, and I'll be glad to help you with that process.
Super. All right. And then, what
does this program do, right?
Yeah.
I mean, is that what everyone knows? What are you going to do for me? So the program is going to provide down payment and closing cost assistance. And when we talk about these percentages, I'm going to say that up to 7%, and that's going to be based on the actual loan amount for your home buyer. So it's 7% based on the actual loan amount. The assistance that's provided with Gold Star, it's provided in the form of a second lien. So it's a forgivable, what we call a community second. So it's forgivable, right? So forgivable means no payments, no interest rate on that down payment assistance. So we're going to forgive them, and we have complete forgiveness after 7 years. And we even have recently introduced some new options that are forgivable in 10 years. And that just simply allows us to offer better interest rates for our home buyers on that first mortgage loan. So we've got down payment closing cost assistance that's forgivable. There's state programs out there that are not forgivable, that you are going to pay those assistance dollars back, whether it's 7 years from now, 10 years from now, or 30 years from now. Whenever you go to sell or refinance or pay off your mortgage loan, you are going to pay some assistance programs back in full for the assistance that you receive. It's always important to know what the program you're working with, what they're going to do as far as how the assistance is provided to you. So know that with Gold Star, it is a forgivable.
So, question. So let's say somebody buys a house and after 4 years they sell. They have 3 more years before the second lien is forgiven. Is it prorated on how much they have to pay back at closing, or what? How does that work?
Yeah, there is a proration for what they'll pay back at closing. On the 7-year forgiveness, for example, there is no forgiveness for the first 2 years, and then it's forgiven monthly for the remaining 5 years. So I mean, it's a mathematic formula, but basically what it is going to be for the 7-year example, it's going to be there's no forgiveness for the first 2 years. then you're forgiven 1/60th a month. We're not even going to make you wait a whole year for forgiveness. We're going to start forgiving you monthly.
Oh,
and so at the end of 7 years, you'd be 100% forgiven.
Gotcha. Okay. So if they sold for whatever reason, doesn't matter, at before the 2 years is up, they need to pay the full down payment assistance amount back.
That would be recaptured when they sold. Yes.
Okay. Gotcha. And that's automatic. Some people think, oh, well, I could, well, unfortunately, some people would think that they could sell it without knowing about it, but that's not how it works. It's a lien. So.
Right. Mm-hmm. Yeah, and title companies will find that lien.
Okay. All right. Go on.
Okay. So we got some extra dollars, though. So for our low and lower income borrowers that are working with our conventional loan options with Gold Star, we've got what we call AIS, or Affordable Income Subsidy Grant, of up to $2,500. And that's a little different. So grants, right? And I say grants with a big G. Grants aren't a second lien. So grants are a complete, total free gift. So that extra, those AIS grants, those aren't a second lien. Those don't have a requirement or a forgiveness structure. They are a gift. So there's actually a potential that you could get even more assistance on top of that 7% that we talked about. If they'll meet those low and lower income limits, you can get that extra up to $2,500 grant. And all those funds, whether it's the second lien or the AIS grant, all those funds can be used for your down payment and or closing costs, however the home buyer wants it applied. So we don't say so much goes here and so much goes there. That's something that the home buyer and their lender are going to decide how to best use those funds. And then remember, too, we're going to provide that 30-year fixed-rate mortgage. It'll be FHA, VA, USDA, or conventional.
Okay, and now the AIS grant, that is only for conventional loans?
Right, that is. And that's something that Freddie Mac is our conventional loan product. Freddie Mac actually supplies those funds. In addition, that they do some other really cool stuff with our conventional options. With our conventional options, we've got lower mortgage insurance than you would get on a regular conventional loan. We don't have loan level price adjustments, so the rate's the rate regardless of your credit score or your debt to income or your loan to value. So, I mean, there's all kinds of cool features that Freddie Mac has provided with our conventional option. And like I say, one of those super cool things is those AIS, or Affordable Income Subsidy grants.
Is there going to be more information on this AIS grant later on, or?
Yes, actually, I do. I have some examples of the income limits, and you're going to see how easy they are to qualify for.
Great. All right, let's keep going then. That's interesting.
So what homes are eligible, right? So now we know what we're going to get, but let's see what we can buy with that money. Okay. So what homes are eligible? So just, kind of some highlights here. The homes you must own or occupy as your primary residence. So you can't use this program to buy like a vacation home. Homes must be located in Texas, but outside of Travis County or the city limits of El Paso and Grand Prairie. So around San Antonio, as you can see, the sky's the limit, right? Wherever you look, you can use the Gold Star program.
Oh, yeah, absolutely.
All right. Our maximum purchase price, $359,600 for FHA loans and $484,350 for all other loan types. So we really, with my program, it's more about the home that you can afford rather than us setting a purchase price limit and you finding a house that's $1,000 more. This really is more about, the home that you choose and that's affordable to you.
Okay.
The homes can be new or existing, and there's no age requirement. Needs to be a residential property, can be attached or detached. Condos, townhomes are permitted. If you're doing an FHA or USDA or VA loan, you can do 1 to 4 unit properties, so like duplexes are okay for government loans. If you're using our conventional option, it's 1 unit properties only, so no duplexes for the conventional. Mobile homes are not permitted, but seller concessions are. So you can, on top of getting our assistance dollars, you can still ask the seller to pay some of your closing costs and just kind of help you out and help those dollars go even further. We just ask that you follow agency guidelines with seller concessions.
Gotcha. Okay.
So kind of easy, right?
Yeah, no, that's
a lot of houses out in San Antonio.
see. All right. And I guess, how do they qualify? I mean, it's, I'm used to the first time home buyer tag for most of these programs.
I know, right? And so I'm just gonna say, I say a lot of no's with these programs, but these are gonna be good no's. So you'll see my first no here is gonna be, they don't have to be a first time home buyer to use our Gold Star program. So you don't have to be a first time home buyer. In fact, you know what? You can even own other property at time of closing and still use the Gold Star program.
Oh, really? So
Awesome.
So if I have a home now, I can still keep it and use this?
You most certainly can. Of course, now the home that you're purchasing with my program, you have to be, you're going to have to own or occupy that. But if maybe you want to keep, the home that you're moving out of and maybe use it for investment property or sell it in the future, I mean, that's up to you. As long as the home that you're buying with my program, you are going to own or occupy, you can own other property, no problem.
Wow. Yeah, that's huge. That's a huge difference.
I know, right? Yeah. We make it easy. So to use the program, you got to purchase a home in one of our program areas, which of course San Antonio. We love San Antonio, and that is a very popular area for us. Mm-hmm. So you do need to be income eligible, because the income limits are going to vary by county. And remember, we have a complete list at SethGoldStar.com, and we'll cover some samples of those income limits coming up. The program is going to have let me back up and say that the income that we use to qualify is going to be the income that on the mortgage loan. So the income is the way the lender determines it. So we're not looking at necessarily family income or family size. We are looking at the income that the lender is going to be using to qualify you for your mortgage.
Okay.
There is going to be a minimum credit score of 600.
Okay.
And you do need to be working with a participating lender. Remember, we do have that lender list at SethGoldStar.com. And home buyers will also be completing our homebuyer education class. That class is available online at SethGoldStar.com. The cost for the class is going to be $100 if there's one person on the loan, $60 each if there are two or more borrowers on the mortgage loan. Mm-hmm. And then that class is going to be offered free for all borrowers receiving our AIS, as Affordable Income Subsidy grant. If you're getting that extra up to $2,500, we're going to give you the homebuyer education class for free.
Well,
so how awesome is that?
Yeah, that makes sense.
Yeah. And I'll tell you, everybody that's, I wanted to kind of give you a special treat. So, anyone that's going to be, watching, this today, just let you know, I'm going to give you a special coupon code to save some money on the cost of this class. So if you will use the coupon code E like egg, E-HOME, 5, the number 5, off, and all those are going to be caps. So E-HOME, 5, the number 5, off. That's going to save you $5 on the cost of the homebuyer education class. So please feel free, and thank you again for having me on and letting me share all this information. I thought we'd share a special coupon code with you.
Absolutely, yeah. I'll throw that in there when we post it. Absolutely, that's great.
So, and I know I teased you about incomes. So here we go, right? Yeah. So here's the sample of some of the income limits. And I picked some counties around the area, and I hope these are good representative counties for you.
Oh, definitely, yeah. Like, these are right there next door.
Good. So we got that first column. That's the income limits for FHA loans. Mm-hmm. I've got a column there, the income limits for our conventional options. And then those affordable income subsidies, those AIS grants. If the income limits, and we've got some what we call low and lower, so I posted the very first one. And so if the income is under $53,440 and they're using a conventional option, they can get that AIS, those affordable income subsidy grant of $1,500. Yeah. In addition to whatever assistance they were already going to get with the Gold Star program. So how cool is that? It's pretty easy, and we do a lot of those $1,500 grants because the income is, the maximum income is $53,440. That's not terrible, and we do have a lot of families under that limit. And remember, we're not talking about family size, so we're only going to look at the income on the 1003. So maybe that may be like husband and wife. Maybe they make too much money together. So sometimes the lender can do the loan in just one name, and then they'll qualify.
Yeah. Wow.
So, kind of a neat way to use it.
Yeah.
But again, we don't do family size. We don't do family income. We really do only look at the income on the 1003, and the lender is going to be following agency guidelines with respect to allowable sources and the calculation methods that they need to use. So they're following the same guidelines they'd follow if they weren't doing a Gold Star loan. If they were doing just a regular conventional loan, they're going to be following the same guidelines. They just don't have to. We don't make up the ways they have to determine income. They do it just like they would for any other loan.
Wow. Now that's a huge point right there. Hope everyone was paying attention to that.
Oh, right. It makes it really easy for the use of the program, and I know it makes us a favorite with the lenders because it is something that they do anyway.
Yeah.
They're doing the kind of same thing they normally would do.
Wow. Well, that's great for you to point that out.
Yeah, those income loans are great, but how it works, right?
Yeah.
Because everybody's like, well, how much money am I going to get?
Exactly. Yeah, this is the big part right here.
Yes. So remember, we still have those extra $1,500 and $2,500 AIS grants as well, but you're working with our down payment program, and maybe you chose a 7% option. You'll see that 7%, and we're going to guess maybe your loan amount was $150,000. So 7%, that would be $10,500. Mm-hmm. All the way down, we've got a 3% option, 3%, $4,500. Again, that's money that you can use for down payment and closing costs, however you need it applied. Mm-hmm. And remember, those additional AIS grants of up to $1,500, $2,500, that you can receive on top of this. So the assistance is going to vary with your loan amount. So the larger the loan amount, the larger the assistance. And with these options, and there's a lot of them, right? So you're like, how do I pick? I mean, how do I know if I want 7 or do I want 3 or 5? So you're working with your loan officer to determine the best option for you. With these options, there's a 30-year fixed rate mortgage that goes with it. Remember, FHA, VA, USDA, and conventional. And so each option is going to have a different interest rate attached for the mortgage. So the more the assistance, the higher the rate. The lower the assistance, the lower the rate. So you can kind of work with your loan officer and decide, do I need the most assistance? So do I need that 7% assistance, or maybe if I'm a little more rate sensitive, maybe I want a little less assistance, at the lower rates. But the cool thing, and I'm going to tell you, we've got the most assistance with Gold Star. There's other programs out there, and they have all different forgiveness structures, but you're not going to find, this much assistance with the other programs. And I'm going to brag a little bit and tell you, you're also not going to find my interest rates. My interest rates are really good, guys. They're really good. We're matching, and oh my gosh, I'm just so proud. So, when we look at interest rates, when we're comparing other programs within the communities, we see that our home buyers are getting a point to a point and a half more assistance, for the same rate, sometimes even better than other programs that are out there. So, with that forgiveness structure, we are able to offer a much better interest rate than we can with traditional old school grant. Grant just straight, no forgiveness.
Right.
Those tend to have a higher interest rate attached, and of course lower assistance amount. So working with this forgiveness structure, we were able to kind of work the best of both worlds there. We were able to get a better interest rate for our home buyers as well as generate more assistance. We also have one last thing I'm going to tell you. We have got what we call the no assistance option, or assistance for people that don't need assistance. That rate is sometimes down to 4.1. And it's just a really great rate. Doesn't matter your credit score, doesn't matter your loan to value, doesn't matter your debt to income, just a really, really great rate. And of course, you can get that AIS grant on top of that. So you can still get an extra $1,500 or $2,500 on top of the rate that, again, we go as low as 4.1. So really, really great options. But, again, they're working with their loan officer to kind of decide, what's the best use of those assistance dollars.
So they're just using that, someone that doesn't really need the assistance, but they can take advantage of the grant.
Mm-hmm. Okay. Most definitely. And that AIS, the what I call the assistance for people that don't need assistance. Mm-hmm. Maybe you've got a home buyer and you've got 20% down. and maybe you've got some credit challenges and you'd get a higher rate normally within the market. You can use our program and take advantage of our 4.1 with, again, no loan level price adjustment, so the rate's the rate. Maybe you qualify for an AIS grant, and you can get some extra money that, for a great rate that otherwise you wouldn't get. So, there's all kinds of different options and ways that it can be used. But again, we've got a really terrific option. It doesn't provide assistance, just a really great rate.
Mm-hmm. Wow. No, that sounds great.
Well, I say gold is better.
Yeah, I like gold.
So, right? I say no. So now for the best part, right? My nose. I told you these are all going to be good nose. Remember, there's no family size. There's no family income to follow. We don't need 3 years tax returns. There is no prepayment penalty for our loans. So if you pay off early, there's no prepayment penalty to your mortgage.
Mm-hmm.
There's no repayment of assistance after our forgiveness terms.
Mm-hmm.
There are no closing delays or advance approval needed. You simply get started by contacting a participating lender. There's no program application to be completed first. You can just give me a call, and I will be glad to direct you to a lender, or take a look at our website, because I have a feeling you're going to know some lenders that are on our website, because there is a lot of them.
Yeah, I know one good one, Lisa.
Yeah, I like Lisa, yes. She is awesome. And I was really thankful for her for putting me in touch with you.
Yeah, me too. Me too. Yeah, folks, get started today. Contact a program lender, and you can see what Seth Goldstar has to offer there at www.sethgoldstar.com. Rhonda, it's been great going through this with you. Do you have anything else to add?
Let's see. Don't forget, that special coupon code I gave to your listeners today. The eHome 5 off. So y'all be sure and take advantage of that coupon code. Save you $5 on that cost of that class. And please, contacting a lender, that's going to be your first step. What I'd like to remind you very quickly, though, is I told you the program sets the rate. So I set the rate. The rate's the rate, regardless of what loan officer you choose. All loan officers have access to the exact same rate, the exact same day. So you're not choosing a loan officer for the rate they're going to give you. You're going to be choosing a loan officer for the service they provide you. So I'm going to encourage you to pick someone that you feel explains things well, communicates well with you, and works through and shares options with you, and really, helps you make the best decision for your family. So again, this program is all about the service that a lender is going to provide you. So, please, we've got really great lenders on there, and I'd encourage you to, definitely, work with someone that you would enjoy working with.
That's a huge point. I get so many folks, just spending so much time and effort on which lender they're going to pick in the beginning, and sometimes it just, it messes things up, from the get-go. But that, knowing that the rate's going to be the same really makes it a lot easier to get things started. And just picking a lender you're comfortable with, and not just the rate. Right. I say the more experienced the lender is with these programs, the much better service you're going to be receiving, because the lender is responsible for everything. I mean, they're handling the approval, they're drawing your closing docs, they're doing everything. Mm-hmm. So again, working with that experienced lender is definitely important. Wonderful. Let's see.
So I thank you for having me today.
Yeah.
And I hope it's on it.
Great. Let me get back here real quick.
The city of San Antonio did a story on it. I'm not city of San Antonio, I'm sorry, KSTAT, the news station.
Oh, yeah.
Yeah, they did a story on us several months ago, and we got a lot of phone calls after that one. So I'm hoping to get some calls from you, or maybe you'll just get the calls.